Let's start with where Americans are right now. Last summer, our credit card debt reached $1 trillion for the first time ever. Household debt is also at record levels, and interest rates that we pay on that debt keep rising. So how bad is our personal financial picture?
What if I were to tell you that 75% of the people in the United States don't have $400 to their name in case of an emergency? And that is true. So how bad is that? That's really, really bad. And so even though I know everybody says the stock market's doing great, although some days it's not, that the economy, we're chugging along here, we have inflation, okay. On the whole, ordinary human beings in America today are living paycheck to paycheck, and they're not doing well at all, in my opinion.
You say that we're in and this is your phrase, a financial pandemic.
Yeah.
What do you mean by that?
Well, you know, we're in a pandemic in that there isn't a financial vaccine to cure this. And so the only way that it can be cured is for people to realize the only way that they can keep going out, keep socializing, keep doing the things, being able to buy a home, whatever it may be, they have to count on themselves. The government's not going to save them. The economy's not going to save them. They're going to have to be their own financial vaccine, so to speak.
What percentage of Americans would you say are financially illiterate?
Truthfully, probably 95%.
What does financial illiteracy mean to you?
Means that maybe you're interested in retiring one day, and I tell you to do something, and you don't have a clue what I'm talking about. I tell somebody to do a Roth IRA, they don't have a clue what I'm talking about. I ask somebody what's in your retirement account, they go, well, it's in a traditional retirement. Don't have a clue. They don't have a will. They don't have a trust. They don't have a durable power of attorney for health care and an advance directive. They don't know what a 529 plan is. They don't understand.
Well, now you're just getting personally hurtful to me.
No,
as some of these things I realize, I don't know. Should financial literacy be taught in school?
Yes, yes, yes. It should be mandatory. That you can't graduate high school and not understand how student loans work. It should be mandatory that you understand what compounding interest means and how your youth contributes to millions of dollars in the long run.
How should you decide whether to buy or to lease a car?
You should never lease a car, right? Leasing a car is the biggest waste of money out there. You only get to drive at 12,000 miles. You have to have a lease gap insurance. Why don't you do what I do? I bought a car, even if you have to finance it. Finance a car after it's paid for in full. Keep it. My car's going on 12 years old.
I lease a car.
So why? I know what you're going to tell me, because it's a tax write-off, Susie.
No, right? I think that I want to not have to deal with an older car, and I can lease it for a few years. It's cheaper. I don't drive it very much. I don't go over the limit, and I can turn it in and get a brand new car in 3 years.
So you're renting a car. Do you own a home?
Yes.
Why don't you rent an apartment?
Because...
Owning?
Well, no, see, that's different because real estate goes up, and the value of my home has increased a lot. But a car is a depreciating asset, as you just said.
Yes, but if you keep it the entire time and you look at the money that
what's the entire time?
And the life of it, if you take good care of it, like my car is going to be good for another 5 years. I just think it's better to buy.
Whole life or term insurance?
Term. Whole life is the biggest waste of money possible.
Good. I get term insurance. So, and this is probably the most important question I'm going to ask you. You talk about people living paycheck to paycheck, and we're now in an inflationary period. How do you save?
Well, make sure your boss gets the cure save. Right? You save by automatically having some amount of money taken from a check every single month and putting it somewhere like a savings account. You have a paycheck for $3,000, you're going to spend every penny. You have a paycheck for $2,500, but $500 has gone to savings, you'll make it on $2,500.
If you do save some money and you got it, where should you invest it?
Now, rather than investing, the first thing you have to do is make sure you're out of credit card debt.
Right.
Because at these interest rates, with the Fed raising interest rates so high, many of you are paying in your 20%. So you first get out of credit card debt.
Okay.
Next, any money market fund, any credit union, any savings account that's paying you now 4%, 5%, right, whatever it may be, that's where you would be saving it right now.
You clearly were born with the salesman gene. I've read that when you were 12 years old, that you went door to door selling garbage bags because you wanted to get enough money to buy a pair of sneakers you
Basketball
like.
shoes, yeah, absolutely. My dad was playing poker. I'll never forget it. And I'm like, Dad, I want a new pair of basketball sneakers. And he looks at me, goes, those shoes on your feet, they look pretty damn good. When you have a job, you can buy whatever you want. And I'm like, Dad, I'm 12 years old. Well, like every Thursday night when my dad played poker with his buddies at our house, there was beer everywhere, there was snacks. And one of his buddies was like, hey, I've got all these boxes of garbage bags. So literally, I would go door to door with a box of garbage bags and I'd be like, hi, my name is Mark. Do you use garbage bags? Who's going to say no, to a 12-year-old? And then I would get my little wagon or whatever, and I'd take them door to door to door. And I probably had the world's first and only garbage bag subscription company. It was great. It literally was great.
So, the people would sign up, and then
Yes.
the next week.
Yeah, when they ran out of garbage bags, there was 100 of them. And they weren't very good because we kept a bunch for years. When they ran out of their 100 garbage bags, they would just call, and I would go deliver some more.
Okay. In 1995, you and a friend buy an audio online service that ends up becoming broadcast.com.
Started, didn't buy, but started.
Oh, really? Because I had read somewhere that
Yeah, they got that wrong. I know exactly where you had read. Yeah, we had started it.
Okay. What was the idea there?
The idea there was my Todd Wagner and I, who was my partner, one of my best friends, went to Indiana University. And literally to listen to an IU basketball game in Dallas, Texas, we would call somebody in Bloomington, Indiana, one of our friends that was still there, and they would hold the radio to a speakerphone, and we'd be on the other side of the speakerphone listening to the game. And when the internet started happening, and I was a technology geek, I was like, I can figure out a better way. So it started with a computer in the second bedroom of my house, and we figured out how to do streaming. Back then, we called it internet broadcasting. And it started with just on demand, then it went to live, then it went to video. And the next thing you know, we were dominating the multimedia on the internet business.
So 4 years later,
That's it.
you sell to Yahoo
Yep.
for $5.7 billion.
Yep,
So
my
how does it
favorite number.
feel? At what age were you then?
How old was I? That was I was 41, going on 42.
How did it feel at age 41 to be a billionaire?
Really good. Really, really good. I make no apologies for it whatsoever. Look, the idea that the internet stock market was going bananas at the right time for us is certainly luck. But it took a lot of work and a lot of effort to get there.
I think it's fair to say that you are, I don't think this will embarrass you, the poster boy for the successful and ethical CEO in this country. I hear that at one point the Vatican invited you to come over to talk with some of the Pope's top advisors about how you keep an institution modern and relevant. True?
Very true, yes. Yes, I got a call one day from someone, I think, in the Vatican's communications department, asking me to come over and speak to the Pope's team about the Disney way. And of course, I had to then ask what he meant by that. And when I inquired more about it, it turned out they were interested in knowing how we kept a brand that was almost 100 years old relevant in a world that didn't look anything like the world did in 1923.
Let me ask you about that as a brand perspective. There has been a controversy in Florida about the, quote, "Don't Say Gay" bill. This is a bill that would prohibit the teaching of sexual orientation or gender identity up to a certain grade and even what you can do after. There was a big question as to whether or not Disney was going to come out against the bill or not. Eventually, your successor, Bob Chapek, did. What is your feeling, particularly with a company like Disney, which its brand is so, and I don't mean this in a negative way, vanilla, I mean, it's not an edgy company as an institution. What's your feeling about Disney weighing in on matters of extreme public interest and concern?
Yeah, and I had to contend with this a lot. And the filter that I used to determine whether we should or should not weigh in considered a few factors. What would its impact have on our employees, on our shareholders, and on our customers? And if any one of those three constituencies had deep interest in or would be affected by whatever the matter was at hand, then it was something that I thought we should consider weighing in on. For instance, I took a position on climate change when President Trump pulled out of the Paris Climate Accords, because frankly, I thought climate change was an important issue for the company. If people can't breathe air, they're not going to be able to go to theme parks. We need to.
I hate to say this, but that's the least of their worries.
Yes, well, we have
breathe
theme parks that would be underwater too if there were
Yes.
global warming. So that was an easy one. Interestingly enough, when immigration came up, particularly the potential cancellation of the Dreamers Act, employees came forward that were Dreamers, concerned they would be deported.
These are the people brought to the country by their parents when they were children and really had no say in the matter. They just were brought as kids.
But were raised in this
In the
company,
country,
in this
yes.
country with this language and going to schools here, et cetera. And so I thought that because it affected a number of our employees, that it was something we should weigh in. And we also need, because Disney has to hire a large and rather diverse workforce. There's another side to this that I think has to be considered, and that is that a lot of these issues are not necessarily political. It's about right and wrong. So I happen to feel, and I tweeted an opinion about the Don't Say Gay bill in Florida. To me, it wasn't politics. It was what is right and what is wrong. And that just seemed wrong. It seemed potentially harmful to kids. And it seemed as though it would do exactly what it shouldn't do, and that is to foster compassion and understanding and acceptance and enable young kids who might be gay to feel more confident, more comfortable, more part of society if it could be discussed freely, as opposed to kept in the closet.
But you are the head of a huge company. You were. I mean, is there any thought or consideration given to the fact, whether it's right or wrong? I'm going to tick off some people, whether it's on climate change or immigration or gender identity. There are some people who aren't going to like what I'm saying, and maybe that means fewer people will come to the theme park.
Yes, I know, and we never really saw much evidence of that, even though there were threats about boycotts on certain things. Again, when you're dealing with right and wrong, or when you're dealing with something that does have a profound impact on your business, then I just think you'd have to do what is right, and not worry about the potential backlash to it. And I think CEOs. One of the things that CEOs accept as a responsibility is that they're going to have to weigh in on issues, even if voicing an opinion on those issues potentially puts some of your business in danger.
2009, you buy Marvel for $4 billion. And the interesting thing there, to me, is that you knew that they already had deals with other studios for some of their biggest properties like Spider-Man or X-Men, but you had something, and I want you to describe what this really was. You call it your Marvel Encyclopedia, which showed that there were thousands of characters that really people didn't know that much about, who weren't assigned to other studios, which led to the making of this movie.
Zuri, my king.
Black Panther. What I'm curious about here is how much pushback did you face beforehand about the idea of making, it's like all these things after the fact, no brainer. How much pushback did you face beforehand, the idea of making a big tentpole movie about a black superhero?
There was a fair amount of pushback. Actually, by the time I basically ordered it into being, I think people kind of understood that they needed to get out of the way. So I wouldn't say pushback is an interesting way to describe it. There was a lot of resistance because people felt it was way too risky. A movie like that cost about $200 million to make. I think it was budgeted initially for less, but we increased the budget because we thought we could turn something that would have been good into something great, and the director had some ideas how to do that, and so we gave him more money to do so. But there was a belief that it wouldn't resonate in certain parts of the world, like China, Asian parts of Asia, that it wouldn't be as attractive because it was basically predominantly black cast. I dismissed all of that because we had in Black Panther a great young director with a vision and a great story and great acting talent eventually. And it was time. It was time to break through with what I think was not only a bold idea, but a right idea.
I'm curious, you just said, that there was some resistance, but then they figured get out of the way. To what degree, as the chairman of the CEO of Disney, could you just say, guys, make it?
Well, I could do that. Over the course of my tenure as CEO, I describe myself at times as being a benevolent dictator. Dictator because I did order certain things to happen. Benevolent because at least I tried to do so in a kind and respectful way. But I think one of the things that a CEO has to do is to balance not only strong instinct and conviction with the opinions of others that you respect and that you trust. And I think there are I think if I were to, as I look back at my tenure as CEO, I got a lot of input from people. I probably let certain negotiations internally take place for over too long a period of time and wasted a little bit of time in the process. I wish I had been even a little bit more forceful or dictatorial earlier, but there were times when I just, this is what we're doing. And interestingly enough, when you do that and something like this works, you develop a lot of trust with people. They have a lot of faith in you, and that gives you the ability to do even more, to lead even more effectively.
You do have a legendary work ethic, don't you?
People say that I work hard, yes, and it's true. I have all my life. By the way, I'm asked often, what's the secret to my success? I think there are a few things. I certainly was raised well, but one of them is a prodigious work ethic.
I want to ask you about, because in your book you talk about, quote, guiding principles, and one of them is the relentless pursuit of perfection, which sounds good, but on a practical basis, what does that mean?
By the way, I can be hard on people too. I think it is never stopping at and accepting mediocrity. It's always striving to make something better than it is, even if it takes a lot more work or more time or more resources. We worked for someone who was, I think, going to be embodiment of that, Roone Arledge, when you worked at ABC News and I worked for him at ABC Sports. Roone was a relentless pursuer of perfection. Michael Eisner was that way. Steve Jobs was that way. I had some very influential people in my life that taught me that good wasn't enough if you could make it great, that mediocre wasn't acceptable at all. And instilling that value in people that work for you, I think, is something that leaders must do. And you have to do it, but you have to walk the talk.
I want to start with your new book, The Algebra of Wealth, in which you lay out a formula for what you say is economic security. And it's basically that your passive income needs to exceed your burn rate. What does that mean?
That's the definition of rich. So I have a close friend who runs the mergers and acquisition group of a large bulge bracket investment bank. He makes between $7 and $10 million a year. Between his ex-wife, his alimony, his home in the Hamptons, his master of the universe lifestyle, he spends it all. He's not rich. My father, between his Royal Navy pension and his Social Security, and he owns several washing machines at trailer parks, he makes $52,000 a year, but he only spends $48,000 without working. His passive income exceeds his burn. He is rich. So rich is simple. It's passive income that's greater than your burn. Such that work isn't work, it becomes your choice.
So let's break that down and let's start with the burn rate, which is basically what you spend
That's right.
in a year. You posted a video in which you said living below your means is the path to financial security and wealth. Here you are.
As a kid, I thought being rich was having a BMW 2002 topsiders, and Varnays. Hashtag awesome. But as an adult, I know better, or at least I know better now. Dispel the myth that you need to be a billionaire to be rich.
That doesn't sound like any fun.
So money is a means to an end. In a capitalist society, you need a certain level of economic security. Everyone has to decide what kind of economic weight class they need to be in or want to be in and have alignment with their partner. But that's not the ends. The ends is an absence of economic anxiety so you can focus on relationships.
You distinguish between income, which is what I make working here at CNN, and passive income, which is what the money you've invested makes. For instance, the dividends on my stocks or the interest on my savings account. And you have an interesting thing here. I was fascinated by this. You say that your asset base, which is all the money that you have saved up, which throws off your passive income, your asset base needs to be 25 times your burn rate to be economically secure. How did you come up with that?
Your burn rate is 100 grand when
Okay.
you retire. You want it to be 100 grand. Assuming the market goes up 6 or 7% a year, which is fairly conservative, also account for taxes, ideally you want to get 25 times that number. That might be even a little bit aggressive. You may need less than that, especially if you engage in a lifestyle arbitrage to bring down your burn. But effectively, what it's just saying is the increase in my assets, the value of my assets, plus rent from a rental property I own, dividends from stocks, income I'm getting from bonds, my Social Security, whatever that passive income is, needs to be a certain amount. And the way I calculate it is my asset base should be approximately somewhere between 10 and 25 times that burn rate. So you can figure out that number.
So for the purposes of this conversation, you're saying if you needed $100,000, that's sort of what your lifestyle and the way you want to live, you need to have $2.5 million somewhere throwing off. And how do you figure that the $2.5 million will throw off enough, $100,000, to cover my burn rate?
Well, that's a fairly conservative assumption, that the increase in that asset base and the income it produces will go up at least 4% post-tax. And also, it's a very intimidating number, but that $100,000 a year might be offset by Social Security, maybe some passive income. You might decide you're still going to continue to work. So that number is really intimidating, but if you start early, getting to that $2.5 million number is a lot easier than you think. So the power of compound interest really is underappreciated by people in terms of their ability to get to that big, intimidating
Let's
number.
pick up on that, because there are a couple of interesting points in your book. You say time is your most important asset, the foundation of wealth, which what are you basically saying? If you start saving early, and as you say, the miracle of compound interest, that it just will build over time?
My first bonus check at Morgan Stanley, I got $28,000. I spent $35,000 on a BMW. I think it would be make me more attractive to potential mates. If I had taken that $28,000 and put it in a low-cost index fund, at this moment, I'd be able to afford 7 Ferraris. So you need to fight that instinct when you're young and realize if you just develop a little bit of a savings muscle, put a little bit of money away, you're going to be in these chairs at our age much quicker than you think, and the power of compound interest is literally a miracle.
Another interesting point in your book, at graduations, the speaker always says, follow your passion. And you say that's exactly the wrong advice. You say, follow your talent.
Anyone who tells you to follow your passion is already rich. And that person who made their billions made it in iron ore smelting. This is your job. Your job is to find something you're really good at, that you could maybe be in the top 10 or maybe even the top 1%. And here's the key point. In an industry that has a 90+% employment rate, which is 98% of industries, this is how you find your passion. Mastery that creates economic security, relevance, a larger selection set of mates than you deserve, whatever that is, whether it's installing soapstone, whether it's being a plumber, that type of mastery will create passion. As you get older, and I trust you can attest to this, you get passionate about taking care of your kids. You get passionate about being able to step in and help your parents. You get passionate about taking wonderful vacations with your spouse.
But can you really be successful? Because what we're really talking about here is finding the thing that you're good at and maximizing your earnings, which will then lead to a better asset base, passive income, and burn rate. See, I've learned all this stuff. Can you really be good at something you're not passionate about, or maybe even don't like?
Well, a lot of it is misnomers. So people oftentimes make mistake their passions for their hobbies. What I'm saying is be a DJ on weekends, and you might find that you're really good with numbers, and you understand the law, and you understand client management. And the best tax lawyers fly private, and they're passionate about it. They find it really interesting. I found analytics and business intelligence. At the age of 8, I wasn't saying I dream of starting a business intelligence firm and I'm really good at analytics. So young people have a tendency to go to the vanity industries, and because there's such an influx of human capital, those industries can pay those people really poorly. I don't want to crush anybody's dreams. If you want to be an athlete or an actor, go for it. But unless you're getting really bright signals that you're going to be in the top 1%, what I would suggest is maybe you workshop something else that you might be great at that pays much better to the top 10%. The top 1% in actors make a decent living. You know, the top 1% in any other industry make a fantastic living.
How do you go from being that 18, 19-year-old kid we see on Johnny Carson, with Jimmy Walker, a young, very talented, promising comedian, to a media mogul? How does that happen?
You know what? I think a lot of the same skills I use as a comedian, I use in business. Just being honest and being open, transparent. People are comfortable with you. And I have a mission, and that mission was clear. You know, when Martin Luther King was assassinated in April of '68, that was something that was quite traumatic for the whole country. And I got to know Martin Luther King's widow, the true queen of America, Coretta Scott King. Right. And she taught me a lot. And she said to me, you know, Byron, as black people in this country, we had 4 major challenges. Number 1, end slavery. Number 2, end Jim Crow. Number 3, achieve civil rights. And then she choked up and she said, and number 4, the real reason they killed my Martin, achieve economic inclusion. And she said, Byron, they didn't kill my Martin over the speech, I Have a Dream. They killed him over the speech he gave in February of '68 at Stanford University, The Other America, where he said there are 2 Americas, and one America has access to opportunity, education, and economic inclusion, and the other America doesn't. There are 2 Americas, and one America will not survive. And from that point on, I decided that I was going to dedicate my life to building the world's greatest media company to help effectuate change for the greater good and to achieve one America.
Let's drill down on race, because the reason that you are the sole 100% owner of this very major media group, the Allen Media Group, is, among other things, you say, because in the first decade or so, you couldn't get an investor and you couldn't get a bank loan.
That's right.
And you have said that the biggest trade deficit in this country is between white corporate America and black America.
Absolutely. That is the biggest trade deficit. And that's what Martin Luther King Jr. taught us. And we have to close that trade deficit to achieve one America. You have corporations out here, you know, like McDonald's. They're taking in over $100 billion a year in revenue, and out of 39,000 stores. And they do very little business with black America, which is why they have all of these lawsuits.
You say it's important for you to buy and for an African American to own an NFL team.
Absolutely. Absolutely. We can't just play the game, we have to own the game. We have to own it. We can't just play it. And so, you know, to Roger Goodell's credit, Roger Goodell, the NFL commissioner, and Bob Kraft, the owner of the Patriots, they came to me. They came, they said, can we talk to you? I said, sure. This was in November of 2019. They said, we need you to help us achieve a goal that's long overdue. And I said, what's that? They said the ownership of an NFL team by an African American. We've never achieved that, and this is important. And we will lean in and we'll help you do it. I said, okay. And they said, do us a favor, stay close to the Denver Broncos. We think that will become available. And I stayed close and I went through the process. We made it to the second round. Our bid was $4.5 billion, and the Walmart family stepped it up to $4.65 billion. And I have to tell you, for me, it was a great process. I learned a lot, and other teams will become available over the next 12.
Are you going to end up owning an NFL team?
I'm going to aggressively pursue an NFL team until we get one.
I want to bring this full circle because I read somewhere that you said there's a connection, a transferable skill between being a comedian and being a big businessman.
That's right.
And that, you know, a comedian has to be able to read the room, and a businessman has to be able to look and see business opportunities.
That's right. Henry Ford said it best. Opportunities are never lost. Your competitors will always find it. And you have to be in the moment, and you have to be flexible. You have to bob and weave. Look, Starting my company from my dining room table 30 years ago with a telephone and a chair and a desk, and my mom was working with me, and Joan Robbins, my talent booker. That was it. Now I have approximately 2,300 employees. I probably had to creatively solve 50 to 100 different challenges every day. When I was calling television stations, they stopped taking my phone calls. They would not return my phone calls. I was trying to sell my television show. So even the receptionist recognized my voice, so I disguised my voice, called the receptionist and say, hey, can I go to the newsroom? Will you transfer me to the newsroom? And they transferred me to the newsroom, and then I said, oh, I didn't mean to call you. Can you transfer me to the general manager's office?
Ooh, good.
And,
Well
right?
played.
Right? And there you go. And when the general manager saw that the newsroom was calling, they picked up the phone.
Right.
I was like, hey, Bob, do I have a television show for you? Okay, that's how I literally called all 1,300 television stations in the country, and after getting about 50,000 no's, I got 150 yeses, and that was, now we have about 70 shows on and blah, 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 blah. But I had to creatively solve hundreds of challenges every day, and that's part of being, a comedian and an entrepreneur.
Thanks so much for watching. Be sure to subscribe to CNN's YouTube channel so you never miss the best of my conversations. And you can catch the full interviews of Who's Talking streaming right now on Max.